Homework assignment, try it, 19-4. We're going to record completion and sales of goods. So the following information pertains to Smith Company. Smith Company completed jobs that cost $25,000 to manufacture. And then we need to record the journal entry. So going back to our slide with the balance sheet accounts and then the income statement accounts. When a job is finished, that means it's going to leave the work in process account and it's going to go over to finished goods. So work in process will be lowered with a credit and finished goods will be increased with a debit. And of course we have to do debits before credits, so we're going to debit finished goods inventory for $25,000, the cost to make those products. Copy, paste, and then remember we are going to remove them from work in process, which means we need to credit that account. Work in process inventory is going to decrease. All right, Smith Company sold jobs to customers on account for $52,000 and the products cost $22,000 to manufacture. Record the journal entries. Record debits first, of course, then credits. Exclude explanations. And then begin with the journal entry to record the sales. So we're not going to adjust inventory yet. It says the entry to record the cost related to the sales will be done in the next step. So we need to record sales. So we are selling $52,000 worth of goods. Copy, paste. And are we going to receive cash, which would be a debit, or are we going to just receive accounts receivable, which is a debit? Well, it says we bought these on, or we sold these on account, so we're going to get accounts receivable. That means our sales revenues are increasing. Of course, revenues increase with a credit. Now record the cost related to the sales. So what's going on here in the second part of the journal entries, we're recording the goods leaving the finished goods inventory account and going to cost of goods sold. So cost of goods sold will be recorded first because that's the debit. And the goods cost $22,000. Cost of goods sold is going to increase. And then don't forget that the account that is decreasing is finished goods. And that's it. Pretty simple. Pretty simple if you understand the workflow diagram where raw materials come in. They move into work in process where the products are being built. Additional costs are added, such as direct materials, direct labor, and manufacturing overhead. They move to finished goods when they are finished. And when they are sold, they leave finished goods and go to cost of goods sold.